All right, everyone, here we are with ticker symbol NEO Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors, and to all my subscribers, welcome back. And let's jump into this chart. So NEO has had a slight bullish run in the last couple of weeks, and as we zoom out, NEO has been running for some months now, but the slight bullish run started at the beginning of September. So for almost a month and a half now, we're going to be, or a month and a week soon, that this stock started to run and continue to hit newer highs and level off. NEO is naturally growing and it's having a lot of volatility in between, but it's hitting newer highs as we speak every week from those points since the middle of the year. I mean, it just reached the recent high of 2260 and some change, 22 and some change, and it has fallen, and the volatility has been very sideways, and the tug of war is going to be very interesting tomorrow because the 50-day moving average is really close to the closing price, and the bears are going to try to tear this one down. So let's move our support levels to its new location and our resistance levels to their new location. Now this is a really close one. The resistance level is super close to the closing price due to the fact that it's right there. So I'm going to talk about this very narrow, and then we're going to talk about it a little broader. So the first thing is our 50-day moving average is super close to the closing price, as I stated earlier. The closing price is 21.60. 50-day moving average is right here at around 21.44. I'd write that down. That lets us know on what side of the chart we're in. And right now, we are slightly in bullish territory, and the bears can quickly come in and tear down through it. But right now, we are by default in bullish territory, and the bulls need to maintain that. How are they going to maintain that position? Well, to stay in bullish territory, they have to break the first resistance level, and it's the highest point in this slight recovery when they fell in in bearish territory, and they ran up, and this is the highest point, and there was a slight rejection created there at 21.65. So the bulls want to break through 21.65, turn that into a support, and work their way up to newer highs. But the most important resistance level here is 21.82. The bulls need to break through 21.82 so that they can create a support level and also break through from there to hit newer highs. So the bulls want to break through 21.82, turn that into a support, go ahead and use it and test it, improve it, and continue to run up from that point. That way they pull themselves further away from the 50-day moving average in an upward direction. So 21.82, super important. But before getting there, 21.65 does give us a sense of direction of where this is going and who is starting to dominate this chart. And by the bulls doing so, they can turn that into a support and break through newer highs and reach newer resistance levels, and then aim towards 21.82, turn that into a support and break through and have a rally to move themselves further away from the 50-day moving average in an upward direction. On the other spectrum, we have what the bears want. The bears first want to break through the 50-day moving average to get into bearish territory. Now, our lowest point here, after the bulls having a run and quickly dipping because the bears appeared, this is the lowest point of the day, and that's 21.08. Now, if 21.08 does get broken through, the next point you want to pay close attention to is here at $21. But before getting there, if 21.08 gets broken through, the bears have accomplished two things. They broke through the 50-day moving average, and they broke through the first support level in bearish territory. So I'd pay very close attention, and I want to emphasize how important it is to know and see how this stock is behaving if it breaks through the 50-day moving average, and how quickly is it moving towards 21.08. And if it breaks through 21.08, I want to emphasize that this could start to see newer lows and newer support levels. So I highly recommend paying close attention to the behavior of this stock and who is dominating it from the point that the bears cross into bearish territory by breaking through the 50-day moving average. But if you're willing to wait at 21.08, I highly recommend paying close attention to the behavior. Are the bears bringing it down to newer lows fairly quickly and new support levels, or are the bulls trying to reappear and recover this one? Super important. As always, if you found this video helpful and informative, please do so and subscribe. Share this with your friends and community. Don't forget to hit the like button. Let me know you watched this video. And also, click on the bell so that you don't miss a single video that I post, and you'll be up to date on every single chart analysis. Well, at the end of this video, that pop-up video, I actually go into deeper detail about the S&P 500 index, and I just want to break it down a little bit to you guys and see what it is that I want you guys to watch. I know I've been saying it in my last couple of videos. Check out the video, and you're like, well, what does that do for me? I'm just looking for the ticker symbol. I want to see the analysis and so forth. Well, this right here is great news for us as investors right now, present day. I know that the Federal Reserve pumps have an effect. A lot of analysis say that, and experts in the future. But right now, in the present, how can you continue to maximize profits? Well, it's been awesome to see the S&P 500 rise the way it has in such a great recovery due to the fact of these pumps. I'm not sure if that trickle effect is already starting to show that these pumps have had an effect where it can actually start going in the other direction, or if this is just due to the fact of the time of the year, people taking profits, the uncertainty that's coming up, or fear, or so forth, right? So that is something that I am already seeing how quickly this is actually fallen. But you can see as it's been falling down that these pumps still have an effect on the market by bringing it up several points. And we're going to go into that in just a moment into detail. But this has been rising up, and it was a great run. It hit highs, and from this point forward, it actually started to fall and it became more turbulent. The volatility has always been there, but these pumps were actually supporting the market on rising up. But we're going to look at the pumps now because this is the state that we're in. We're not in that bullish run anymore. So I'm going to pull this up. These are some of the most recent pumps. This was released right back on the 14th of September, and the next release date is October 14th. So the first one was on the 15th, and we're going to look at that in just a second. The second one was on the 22nd. The third one was on the 29th, and the most recent and upcoming one to be the recent one is 10/6, October 6th. So we're going to look at those dates. So the 15th, this was September 14th. It slightly dipped and it ended off around 33.83, and the next day was the 15th and it rose up to 34.18. That right there is a rise of several points for the S&P 500 index. And again, 21st rising up, and we land on the 22nd. So the day pretty much ended and started here at 32.61, and the end of the run, because then comes the 23rd, the end of the run on the 22nd, which was the date of the next pump, it reached up to 33.21. So again, rose up several points. Now the anticipation here for the next pump and the week that was coming, the end of the week started really strong, started the week strong on Monday, and it started to dip on that Tuesday of the date of the pump. Well, guess what? The pump actually saved it from hitting newer lows and actually created momentum to continue to rise up because it hit 32.28, and before the day ended, it rose up to 33.49. This is actually one of the pumps that I've seen the pump do the least effect in rising it by several points, but I have seen the pump do this before, stop it from going in this direction and rising it back up, creating an attractiveness to the market to bring in obviously more investors and obviously do this effect to bring it up. And then obviously the volatility of the market is normal to be seen like that. So we're anticipating the next one, but what I want to talk about is what does it mean for us as investors that these points of the index are rising up? Well, if the index of the S&P 500 is rising up several points, that means that it is rising up and there's 500 ticker symbols within it. Some of them, not all of them, are rising up with it. So individual ticker symbols are rising anywhere from 30 cents to up to $3, maybe even more. But I have seen ticker symbols rise on the dates of these rises and these points rising on the index. Individual ticker symbols rise 30 cents to $3 per share. I know that that doesn't sound like a lot. It sounds like Oh, well, it's 30 cents. Oh, it's $3. I know. I know it sounds small, but per share, it does add up. And I'm not saying that it guarantees you profits, but profits are profits. And I always say that in all of my videos, especially when I'm talking about this. And this is an opportunity to maximize profits and minimize your losses. I'm just encouraging you guys to check out the video. I go into more detail about it. I just wanted you guys to see with your own eyes the dates of the pumps and what it has done. And if we go back to previously reaching these highs and dipping, this pump of the scheduled dates was rising us up in an upward direction. I mean, here are some notes, and I also had notes here, but I deleted it because I didn't want those notes to go ahead and confuse people in the upcoming pump dates of over here. But something that I find interesting is, yes, on the dates of these pumps, the market was rising up to newer highs, reaching newer levels, and going up to the point that it hit these highs. But on the way down, on the dates that the market is rising several points, I mean, you do see it several times before, okay? That's good. But on the dates of the pumps, it's actually rising. It's actually rising. It's actually leveling off, rising, creating momentum to go to the next level. And it actually rose due to the fact of the anticipation of people knowing that there was probably an upcoming pump. So many investors know about this. A lot of people aren't speaking about it, or they're unaware of it. So I'm here to share with you guys that there's an opportunity to maximize profits and minimize losses. Click on the video, check it out. I go into more detail about it. I hope you find it helpful and informative. And thank you guys so much for watching, and let's make some money.